Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm your host, Douglas Jonas, live on the floor with Tom Hancock. He's the head of focused equity at GMO. Tom, thank you for joining.
It's great to be here. Thanks for having me.
So you just launched your very first ETF. GMO is officially in the ETF business. Tell us a little bit about how you've entered the space.
That's right. We just launched our first ETF, QLTY, stands for quality. We've been interested in ETFs for a long time, but we're really seeing a lot more client interest now. People like the taxable aspects. People like the convenience of trading it. Even our institutional clients are finding that, so it's a great time.
Yeah, I mean, the benefits of the ETF wrapper, we talk about it all the time on this show, but talk a little bit about GMO. You have a bit of a distinguished way of thinking about investing.
Yeah, that's right. I think people who know GMO know us through Jeremy Grantham and know us very much as value investors. And we are that. We're very academic too, students of history. But for us, value has also been about the right company at the right price. So putting a big emphasis on quality has been a big part of what we do since the outset.
Yeah, let's dig a little bit into that. So how is it you believe valuation sort of plays its role when you start thinking about investing in the equity markets?
Yeah, well, I think over the long run, valuation is about return, but it's also about safety. Like a lot of times when you see things get really frothy and really expensive stocks, they're not only going to underperform, but when things turn sour, those are going to be the worst, most dangerous companies to hold.
So take us to the present, right? I mean, this has been a really interesting equity market all year. Are there companies now that you're finding attractive?
Yeah, absolutely. And the three big sectors where we tend to invest are technology, consumer staples, and healthcare. And we've seen now that interest rates have gone up, the staples companies are really lagging, and we think there are some great opportunities that are both safe and attractive. I'd say the same about a lot of healthcare stocks as well. But at the same time, we don't want to ignore the growth part of the market. Like those big blue chip tech companies that just keep compounding. You don't have to go too far to find ones that are actually pretty attractively priced for what they can deliver.
Okay, so the ETF QLTY, for an investor, for an advisor, right, they're thinking about your valuation approach. How do they think about this as part of their portfolio?
Yeah, most of our clients use us as a core manager. If you think you might focus on something that's a little more thematic, a little bit riskier, our strategy is very much a strategy you can put under your mattress and not worry about for the next 20 years. And that's, I think, very important for a lot of people. You ask why not just use an index? I think a lot of it is, while we have been able to outperform over time, a lot of it is that element of safety. We're really outperforming the recessions, the tough markets, when people need us the most.
Okay, now as a reminder, if you caught this episode live, you want to learn more about GMO's new ETF QLTY, you can find it all on our website, etfcentral.com, all brought to you by none other than the New York Stock Exchange, the home of ETFs.